Have you ever wished you could actually enter cost of goods sold instead of dumping everything in variable expenses? Well, that's the topic of this week's Planning for Profit Minute. We've added to the software. You've asked us that question that, hey, Bill, in our company, we don't put fuel as an overhead expense. We list it as part of the cost of goods sold. Or job permits, we list it as part of cost of goods sold. Well, if that's the case, you can now do that in the software as well. Let me show you how it's done. So in the software, we're going to go to cost input on the right-hand side, and where you're normally entering your expenses. Prior to this, we always entered all of those expenses under variable expense. Well, now today, when you add a new variable expense, so I'm going to click on Add Variable Overhead, we get the window that's going to open up here. We can now add these items in here, right? So, right, I plug in whatever it is, annual cost, select our category, right? And again, that's one that you don't really need to do. Right underneath that, you will now see a checkbox for cost of goods sold. If you check that box, it will now consider this item not a variable expense, but cost of goods sold. And so you still have to enter everything else in just like you normally would. So this is all, I'm going to apply 100% of that to installation. When I accept this item, again, it will still show up here in my list under variable expenses. But now when I go to reports, one of the things that you will see, right, and if I run my profit statement and scroll down, I will now see we've got, of course, our sales. We've got our cost of sales and service. That's our cost of goods sold. You will notice that in there we now have this entry for job permits with $1,000 allocated to that department, right? And I'm standing in front of it here, right? But so we've got that in there. It now takes that into account. And here's where this is important, is because number one, in factoring in all of our calculations, if you're normally building that into the cost of your jobs, then I don't need as high of a gross profit, right? It is affecting your gross profit percentage. For example, if I come up here and say, give me just that one department, just the installation department, it's telling me what my required gross margin is for that department, right? So I can see that here. Also, out on my dashboard, right, we have our gross profit targets out here, right? And when I look at this portion of my dashboard, these two blue and green dials here, the overhead profit, right, at 65%. Now, again, I don't have a whole lot in this particular model, but 65% is the overhead that I need just to cover my costs. And if I'm looking to hit a 10% net profit, that's going to be in there. Now, in here, I need to hit my, actually go ahead and hit my installation department, right? So for my install department, it's a 40% is my total cost of goods sold. Now, again, if those job permits were in variable expenses, well, this number is ultimately going to have to end up being higher. So it does change that number. And then again, I'm looking to hit a 10% net profit. So my target net profit that I need to hit in my company is a 50%. That will cover my cost of operation and generate a 10% net profit from my company itself. So again, utilize that cost of goods sold item that's there. We've added it in. It's purely for your use. If you have any questions, reach out to us here at Grandy & Associates.